Hi everyone, let's go over my macro and high time frame Elliott Wave scenarios on Bitcoin, starting with the macro bullish scenario where we are looking for more upside in a wave 1, 2, 3, 4 that is already finished, and then a wave 5 to the upside where the most common target for a wave 5 is between the 1.236 and the 1.618, pulled from the high of 3 to the low of 4 between 98k and 174k. In this particular scenario, wave 4 is finished, bouncing right on top of the 0.5 Fibonacci, taken from the low of 2 to the high of this wave 3. Also, this low was exactly made on the 0.618 Fib time over here on the weekly time frame, also pulled from the low of 2 to the high of wave 3, and we had a nice volume peak at the lows at this wave 4, which can signal a bigger reversal area, just like it did with the wave 2 over here. This was, however, the COVID dump, but after this high volume dump over here, bouncing right on top of the golden pocket for a beautiful wave 2, we then went to the upside to new all-time highs in a bigger wave 3. Now, in this particular scenario, there were two trading setups, basically. The first one was entering right around these lows, expecting this to be a potential wave 4, stop loss below the 0.5, as high time frame candles are not allowed to close below the 0.5 in a wave 4 scenario, for then a move to the upside. But this, of course, was a lot more risky, not really knowing per se if price was going to go deeper. More safer, I suppose, is the second setup where you can add into potential retracement for then a big swing trade all the way to the upside in this particular scenario, depending, of course, eventually what happens on the lower time frames, because the lower time frame counts are making the higher time frame counts. If we then go to the bearish scenario, we are in an ABC zigzag. So in this particular scenario, we have a finished 5-wave structure to the upside. The thing is that this wave 4, however, is relatively short compared to this wave 2. Usually a wave 4 takes more time to form than a wave 2, but in this scenario you can clearly see this wave 4 is very short compared to this wave 2. Now, one could potentially move wave 1 to the right and wave 2 to the right, but that's for another video. But in this scenario, the high, the all-time high, is the high of a wave 5, after which we then expect a zigzag scenario. In this particular case, it's then an A followed by a 3-wave structure in a wave B, and then eventually a wave C to the downside, where in this first move of wave B to the upside, we then expect another 5-wave structure, so an ABC, and then this being a wave A 5-wave structure followed by a 3-wave B and then another 5-wave C towards the upside, where I think it is quite nice if this wave A is finishing around this wide box over here. Now, the high might already be in, but we go to the lower time frames, the high time frame scenarios, in a second. So this wide box over here is a big support resistance area over the years, which can now act as resistance, first time retesting this area, for then a potential 3-wave move towards the downside and then continuation to the upside, where this area for a wave B potentially is very interesting because of the resistance in this wide box area between 39k and 50k. And the resistance that we have is a golden pocket taken from the high of 5 to the low of this wave A in confluence with the point of control of this very big range over here. And then you have the 786 in confluence with the value area high of this range as well. So massive resistance right above where price is at the moment, for then a potential high of a wave B and then continuation to the downside in a wave C. Now, the target area for this wave C is between the 1 and the 1.236, which is currently between 11.4k and 8k, and it is estimated based on the potential high of wave B. So if the high of wave B is right around the 786, then this is the most common target area for wave C. But if the high of B is going to be lower, you can see that the target area, most common target area for a wave C, is dropping. But what I like about the target area of wave C over here, when the high is around the 786, is that the golden pocket taken from the low to the all-time high is in confluence with the value area high of this massive multi-year volume profile. So this is incredible support for Bitcoin on the macro chart, after which you then expect a continuation to the upside. Now, at the moment as it stands, I guess my bullish scenario is preferred, mainly because, of course, then the wave 4 scenario, this wave 4 is longer in time than this wave 2, and it fits the count much better, let's say, compared to this being a very relatively short wave 4 here. If we then go to the more, let's say, lower time frames, which then is the daily on the high time frame, I have 3 scenarios, of which 2 are alternative. Now, this is my most alternative scenario out of the 2 alternatives. This is the least likely, let's say, where wave 2 is already in, of then a potential 1-2 1, 2, and then expecting already a bigger 3 towards the upside. So in this scenario, we then have a 5-wave move in a bigger 1, 3 waves in 2, 5 waves in this wave 1, which is then already finished. And a wave 2, the most common target for a wave 2 is between the 0.5 and the 0.786, which is between 24.7k and 21.6k. But as you can see, the 382 as a rare target is currently the place where price found support. But this is a rare target for a wave 2 and something you don't really usually like to see for a wave 2. Of course, it's possible for price to go to the upside, but also if you have been following my daily updates that I do multiple times a day, you know that a potential 1-2, 1-2 scenario for then a bigger 3 is currently not that likely, and actually the more likely scenario is finding a little bit more downside, which would be nice as well. But that also means that this wave 2 is not yet in, and we basically have a longer correction to come, where what is interesting as well is that this wave 2, which is a higher degree wave 2, because the green count is a higher degree count compared to the blue count, because the blue count is part of the bigger 3. So you have a 1, 2, 3 in green, and then inside the green 3 we have a 1, 2, 3, 4, 5 wave move, right? Now this blue wave 2 is already longer than this green wave 2. Now one has to say this was a very short green wave 2, but the fact that this wave 2 is so much longer than this very short wave 2 also makes you think twice, like, hey, is this wave 2? You know, we have to wait and see. It is possible for a lower degree count to have a bigger wave 2, but it is not that great looking right now. If price moves to the downside and hits these lows, that is the invalidation for this particular scenario, where if we go to the second alternative scenario at the moment, might be preferred if we get that potential leading diagonal, but we have to wait and see for that. But in this scenario, still alternative at the moment, we then have a wave 1, then a wave 2, then we have a wave 3, 4, 5. And actually this scenario used to be my preferred scenario. I'm literally on the edge between this preferred or my other scenario, which is this one. So yeah, we have to wait and see what locally happens. But in this scenario, the low of wave 4 is already in, which was between the 0.236 and the 0.382, which is the most common target for a wave 4 if wave 1 is the extended wave. So usually a wave 3 is the longest, strongest, the biggest wave in an impulsive structure. But in this scenario, it is wave 1. So wave 1 is then the biggest structure, followed by 2. Then we have a wave 3, which doesn't have a target in an extended wave 1 scenario. Then we have a wave 4 over here, where the most common target, as mentioned, is this area. The invalidation, however, as you can see, is 25.3k, because you don't want to see overlap between a wave 1 and the wave 4, after which you then expect a wave 5 to the upside, where the absolute maximum target for this wave 5 is 38.1k. The moment price is hitting this area, it invalidates this scenario, as long as at least you didn't have a bigger retracement, because after a potential wave 5, you really want to see a bigger retracement to the downside before then again moving towards the upside and reaching these potential levels over here. Now this wave 2, if this is then a extended wave 1, this wave 2 bounced on the 0.5, which funny enough is a wave 1 is extended, is a rare target for a wave 2, so that's something to keep in mind. And if we then go to a scenario I'm currently keeping my eye on, also because of the more lower time frame scenarios, but of course we have to wait and see how price develops throughout this upcoming week. We then have a wave 1, 2, 3 sideways 4s, and then a wave sideways 4, and then eventually a wave 5 to the upside, which is then the high of a wave 1 and a wave A. And on the macro scenario, what is interesting here is that this is inside that white box as mentioned. So that could be quite interesting then in this scenario, where we are then looking for a move towards the downside in a 3-wave structure, and then a wave 2 or a wave B. Now in this scenario, the wave 2 most common target areas mentioned, between the 0.5 and 0.786, taken this time from the low to the high, is between 22k and 17, basically 18k. So that's quite a big area for a potential wave 2. However, and then the rare target for a wave 2 is the 382 and the 886. But for a wave B, the 382 is a common target, as well as the 886 is just a common target for a wave B. So wave B, common target, is this whole Fibonacci area. So that makes it interesting to see that if price is going to find more downside, if it is bouncing on the 0.382, the probabilities are in favor for this being a wave A B, and then expecting a C to the upside. If price is going to dip deeper into this potential target area right on top of the 0.5 and the target area between 21.9k and 22.6k, then the probabilities for a wave 2 and a wave B are equal, and we have to wait and see how price is going to develop towards the upside, because a wave C tends to be more lazy and sideways. Usually a wave C takes a little bit more time than a wave A, so you expect a wave like this, while if it is going to be a wave 3, you want to see a more vertical move with a lot of volume as well. Volume should be increasing massively with the price action going more vertical, just like you saw over here. Basically, that's what you want to see in a wave 3, but a wave C is more lazy. So we have to wait and see how this is going to develop. The invalidation at the moment is as if price is going to move to the upside here without even hitting the 0.382, then this scenario is invalidated, and the invalidation is at 31k. So I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use, in my opinion, on the lower time frames, that is. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.